Welcome to the Sunshine Coast Real Estate Podcast, your go-to source for all things real estate on the Sunshine Coast of beautiful British Columbia. Whether you're a first-time homebuyer or an experienced investor, we've got you covered. And now your host, Nathan Demers.
Hello, Sunshine Coasters. Today I want to talk a little bit about the sexy topic of life and disability insurance. Nobody likes talking about this. Nobody likes paying for this, but it's one of those things in life that is absolutely necessary. Having proper insurance in place protects your family in case something awful happens, and it is so important that you have adequate coverage. I come from a healthcare background, and between spending years in that job and years in the finance world, I've seen firsthand the after effects the death of a loved one, or the sudden inability of someone to provide income for their families can have, because of some terrible, unexpected accident or diagnosis. The stories I could tell you are heartbreaking, but I'll save that for another much more depressing podcast. Back when I worked in the emergency room, I'd see all kinds of crazy things. The one thing that was common among the patients, though, was that none of them thought their day was going to end up in the ER, right? Like they got up that morning and they planned to go to a birthday party or something. The next thing they knew, they were wrapped around a telephone pole, shortly thereafter intubated with a crushed liver and 2 broken hands. Okay. So this is getting a little bit dark, but my point is that these things are totally random. We never think they're going to happen to us. And when it does happen, it could be catastrophic. So having said that, I don't look at my own insurance payment as a bill. I see it more like a regularly recurring act of love for my family, right? Like every time I pay that insurance bill, I'm reminded that my wife and kids are going to be okay if something should ever happen to me. So every time I'm shelling out that cash, it actually gives me a good feeling, because I get this constant reminder that okay, I'm doing this for my family. I'm doing this for my wife. I'm doing this for my kids. Likewise, should anything ever happen to my wife, I'm going to be able to afford to put all these little monsters through school, feed them, clothe them, keep a roof over our heads, because I've got adequate coverage. And this is especially true here on the Sunshine Coast because it is particularly expensive to live here. Now, there's all different kinds of insurance available to people, and I am definitely not an expert as to the different types. But part of my job as a mortgage broker is that I'm required to offer what's called mortgage protection insurance. And one of the things this insurance does is, for example, if one of the mortgage holders should pass away, the mortgage is paid off in full. So that leaves the other borrower with a house that is free and clear with no mortgage payment at all. So to help explain a little bit about the mortgage protection plan, I've invited Suleman Bhamjee onto the show. Suleman works for Manulife Insurance, and he's here today to talk a little bit about some of the differences, as well as why mortgage protection insurance may or may not be for you. Hey, Suleman. Good, how are you?
Good.
Good to see you again.
You too, my man.
How are you doing today?
Oh, it's a nice, beautiful day, so can't complain.
Where are you based out of again? In Vancouver?
Vancouver.
Oh, okay. I'm just over on the Sunshine Coast, so.
Oh, you got some better environment around you than I got over here then.
Yeah, it's nice. Yeah, for sure. The ocean's right there, and yeah, it's a great place to live.
Super jealous.
Yeah. Hey, well, thanks again for being on the show here. I really appreciate it. So let's start off with kind of your story. Tell me about yourself a little bit. How did you get into the insurance business?
Well, a long time maker. Started off as a lowly teller, as a lot of people started off in the financial industry. Moved on over to an account manager role, over to a financial planning role where I was doing that for a few years, went independent with Investors Group. Before I took on this role,
Sure.
I was with RBC for 4 years, dealing with on an individual basis, business owners and things like that, plans,
Right.
insurance, investments as well. And then I was given an opportunity to move on over to this role. And it really intrigued me because being on the individual side for so long, when you look at people's insurance needs and things like that, and then what happens is you're so involved in terms of providing this person with a service or product. What happens is you're dealing with it for long enough. You have the client that comes in and says, okay, well, this happened to me, or this happened to my mom and dad. How much are we covered for? And that really opened up my eyes in terms of, okay, well, there's a real need for this thing because, yeah, it is a product that we sell, but when it affects people's livelihoods and really affects them to a core, it really kind of opens up your eyes. Okay, well, we are making money on this side of things, but we are really helping people because at the end of the day, if someone can't pay off their mortgage because somebody passes away, or they can't pay off their mortgage because they can't work anymore, us being able to help people in that manner, we really are helping people stay in their homes. And
yeah, I always think of it as just like an act of love for your family, having insurance.
It is.
I mean,
big time.
Yeah, you don't want to leave your family in the lurch if something should happen to you and that sort of thing. And I always sort of think that nobody likes to pay it, but it's one of those things that like the very best thing that can happen is that you never had to pay it. You know, and so because nothing terrible happened, hopefully, right?
That's
So
exactly it. That's exactly it. Because,
yeah,
it's one of those things where I always say you want to get it when you don't need it, because when you need it, you can't get it.
yeah, that's right.
So
That's right.
yeah, yeah. So I was given the opportunity to come on over to this side. And one of the things that intrigued me working with MPP was the fact that when I was with RBC or Investors Group or at the bank, I was really dealing with people on an individual basis.
Okay.
And coming over to this side, I was able to work with brokers and in turn help more people and get the
Mm-hmm.
message out there as much as possible. So that really excited me more than anything.
Okay.
Yeah.
Well, let's talk a little bit about that product. So, can you briefly just sort of tell us what the mortgage protection plan is at Manulife?
Yeah. So MPP, a mortgage protection plan, is life insurance and disability insurance, basically protecting the client's debt. So this is different from insurance through an insurance broker or through work benefits in that we are more on the debt protection side of things, whereas insurance through those other sources is more income replacement. So we're designed specifically to cover the client's debt, whereas those other insurance products are mainly for income replacement in case something does happen.
Okay. So how is it different from the other lenders like term life insurance, for example, and maybe a bank specific at RBC or TD, not to name big banks, but any other standard banks insurance products?
Yeah. So when it comes to term insurance, it's specifically for a specific time period. So term, so it could be term 10, which is term 10 years, or term 20 is 20 years. So that's really what the main difference in terms of MPP versus term insurance, in that for term insurance for a specified time, whereas with MPP, it's for the duration of the person's, not necessarily their mortgage, but really up until the time they're insured, up until age 75.
Okay.
And the difference between our MPP versus bank insurance is that, for one thing, we are 100% portable, which
Right.
means once the client leaves that institution that they originally got the mortgage with, the insurance follows them. So it's never tied to a specific lender or property. It's tied to the client. Whereas insurance through a bank would be specific for that one bank. So once that client leaves that bank, that insurance stays with that institution. They're really the value of MPP, because a lot of times as brokers, where you could recommend a loan from, bank B, has better rates than, let's say, RBC, because they're linked to that insurance carrier with that bank, they may not be insurable anymore. So they end up tending to stay with that original insurer, even though it's not in their best interest. Whereas with
Okay.
MPP, like I said, you can switch over 10 times over and the insurance will always follow you.
My understanding too is that with MPP is that it's underwritten in advance and not after the fact, where some other insurance providers will. I was talking to Jill Mullery, a broker out of Alberta yesterday, and we were talking about MPP, and she was mentioning that some big banks will, once the person makes a claim, say, 10 years down the road, that's when they underwrite it and they'll say, hey, you don't qualify anymore, but we will refund your premiums, but you're not going to get a payout. Is MPP is different in that way, is my understanding. Is that right?
That's correct. So what you're describing is what they call post-claims underwriting. So
Right.
in a situation where, let's say I go, get a loan and go through the insurance side of things. So on the questions, it'll say, do you have this, 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 and this, and this at all? Of course, I'm young and healthy. I don't have most of those things. So I'll say no. And
Mhm.
then when it comes to claim time, they'll ask me if I have these things. But of course, after 10 years or 15 years, our health changes. So at the time of origination, I may have not had it, but because I have it now, I may be declined because of it. Now with us, we do all of our underwriting beforehand. Because we're an insurance company, we basically take the same kind of route as individual insurance, which is the other route. So we do all of our underwriting up front. So if anything were to happen, basically a contract saying that at this point in time, our health was this, so therefore we should be covered later on.
Okay. And so is there anything that can cause somebody to not qualify at all?
In terms of health, so it comes down to their past experience. So let's say, for example, I may have experienced a heart attack or something 2 years ago.
Right.
So that could be something that I'm under medication or I'm under doctor's observations for something. So that would cause maybe to be declined in terms of full coverage. But the cool thing about MPP is the fact that even though we may decline full coverage, at the very least give the client an option to get accidental insurance. So
Okay.
accidental insurance is essentially insurance that covers you in the event that you get into an accident. So with the immediate coverage, the full coverage, you could be affected by this natural causes, whereas accidental coverage covers you in case of an accident, essentially.
And then the age limit's 65, I believe, right?
That is
65?
correct.
Okay.
Yeah.
And then so can the policy be adjusted as time goes by if a person's needs change, or let's suppose they move to a different house and it's more expensive. Now the mortgage amount has changed. That's a available option as well. Is that correct?
That's correct. And the cool thing again with our coverage is, let's say, for example, again, in 2020, you get a mortgage for $500,000. So you got a life insurance policy for $500,000. And now in 2023, client decides to sell and upsize, and now they need an extra $300,000 of coverage. So because the client is essentially insured for $500,000 in 2023, all they have to do is apply for an additional $300,000 of coverage because they already have the $500,000 in place. So what we'll do is in terms of the cost, because as you get older, insurance becomes more expensive. So we'll crystallize the cost at 2020.
The original.
Right. And then we'll basically blend in the two prices in one payment.
Interesting.
Price as low as possible. Yeah.
Okay. So once a person signs up for it, is there any medical or health exams required?
So what we have is on the application, we have 5 questions, health and underwriting questions based on lifestyle and past health. If the client says no to those, what we'll do is, and for the life insurance, if it's under 700,000, we'll provide them with immediate coverage. So automatically approve them for life insurance.
Okay.
Okay. So, but for the disability, what we'll do is we may do some underwriting as well, follow-up underwriting. So the client will expect a telephone interview. It might take about 20, 25 minutes. I took mine, it was about less than 20. And then we'll basically ask questions like, do you do this, 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 and this? Have you experienced this, this, and this? Have you gone through medical situations? And based on that, we'll decide what step to take. So most cases, we'll make a decision at that point. But if we to get more information, we may send a nurse to the client's home and to take blood and urine samples. In most cases, we don't like to do that because, of course, it costs the insurance company money.
Right.
But again, in some cases, we'll do that.
Okay. And so if the client does make a claim, how does that process work?
Basically, we ask the client to submit a claims form. And then from there, we'll go through our claims department. If a person passes away, we'll require the certificate of death. But if the client is going through a disability claim, because we have a 60-day waiting period, and then from there, we'll ask the client for a doctor's note, essentially proving that they've gone through what they've gone through.
Okay. Is there any discounts available to specific professional organizations, societies, that sort of thing?
Not necessarily.
Okay.
So because we're debt protection insurance, we essentially look at the client's debt overall. So what we do is basically group insurance. So everybody across the board gets the same rate in terms of cost, but on the application, the second borrower gets a discount on the life insurance. So if you have 2 borrowers on the application, the second person gets a discount.
Okay. And finally, can you tell me about a time MPP helped someone out of a bad spot? You must have stories.
Oh, man, I do.
I've got one too, actually, but I'll hear yours first.
Yeah. So I actually had a broker call me, and basically what happened was the client had a brain tumor or something like that. They didn't know they had the insurance in place. And so we were able to not only back pay the client in terms of what we owe them if they did claim right away, but we honored the total amount. So we were able to pay the client an amount that they didn't even know that they were eligible for. So this is just one example of how MPP or Manulife even pays claims when they don't have to, because if they don't make a claim after a certain period, we don't have to honor the claim.
Okay.
But we went, the insurance company did the right thing and did pay the client even though it passed the threshold. There was a situation where, there was a husband and wife with 2 kids, and unfortunately the husband passed away of a work accident. And then basically what was happening was they took the immediate coverage. So what happens is once as a broker, you submit the application as applied or agreed to us, we provide the client with immediate coverage while we do the underwriting. Okay. Yeah. So during that time period, the husband passed away of the work accident. And we basically paid off the balance of the mortgage even before the clients moved into their home.
That's my exact same story. I was just about to tell that same story.
Oh, yeah. You have another story just like that.
Well, it's just like that. I don't know if it's the same person or not, but the same kind of thing. The client opted to get the MPP insurance. In the meantime, the husband on his way to work was tragically killed in a car accident. And by the time the wife and the kids moved into that house, they owned that house free and clear because they had that MPP insurance in place. Yeah.
Same scenario, but the husband worked in the north logging industry.
Okay. This is oil patch.
So there you go. So it happens more often than you think.
Yeah. Oh, crazy. Okay. Well, is there anything else you want to say about MPP or anything like that? Is there anything we didn't cover?
I think the major thing is, like when it comes to insurance, even though it's all a blanket term in terms of what we provide in terms of credit insurance and financial planner insurance advisor, recommends, because I was on that side of the business or the industry, even though they take the MPP, I would still recommend clients do talk to a licensed advisor to get a second opinion. The crux of it all, I want all your clients to be covered because like the example we just gave, it happens more often than none where something happens to a person that we love or even a client. And I just want to make sure that we protect as many people as we can, because at the end of the day, there is a human side of this business and we are helping people, not only getting in homes, but if something were to happen to the client, we want to make sure that they are well protected.
That's kind of what I always say too, is like, you definitely need coverage from somewhere, whether it's MPP or not, that's up to you. But if you the MPP, you're covered right now and you can switch it up later on, and the premiums are free for the first 60 days. And so what often happens is, as I'm sure you know, I find when I have clients that say, yeah, I'm going to take care of that later, they never do. 9 times out of 10, they just don't get around to it. And it's not a fun thing to think about or talk about or pay for. And so I'm always encouraging to, if you don't have something in place, then go with MPP, or please go get something, because you do need coverage to protect you and your family for sure.
Exactly. So one thing I would recommend for all brokers to do is, of course, the mortgage is their primary job and what they're there for, but really just ask them questions like, hey, do you know exactly how much coverage you have? And in most cases, people don't know. And they just assume that they do have coverage through work, but they don't realize that the coverage they have at work may not be that much as they think it is. So what I recommend is, okay, well, take this insurance now. You're immediately covered in case something happens between now and then. Go find out what you have so that you are 100% sure. Because during this process, they're jammed with all these different things that they have to do. They have to go through the moving process. They have to find a house to buy in most cases. There's a lot of things that are on the top of mind. So getting insurance is probably the last thing that they want to do. So get the insurance now. Go shop around. Go talk to a licensed advisor. Go get a second opinion. And if you feel like that you have adequate insurance, call us and cancel, because the cancellation process is just as easy as the application process. So we make it super simple.
I find that people thinking they're covered at work is such a common thing, and it's rarely adequate coverage. I come from a healthcare background, and so I get other healthcare people that say, oh, no, I'm covered at work. So I know what the details are, because I was a young person when I signed up for that same thing. And when I looked at the details once, 5 years later, and it was before I had kids, I was like, oh my God, I'm only covered for 50 grand. Like, that's not going to put my kids through school and cover the mortgage payments. And, my wife would be totally screwed if something ever happened to me. And so I often tell people, especially healthcare workers, because I'm like, no, I know your coverage is not good enough.
Exactly. In typical cases, like exactly what you're describing, in terms of life insurance, it covers 1.5 times salary. So, being in BC or Ontario and a lot of other places in the prairies now, 1.5 times salary is not going to pay off many mortgages. Even if you do have a plan through work, if you decide to leave that occupation or that company, that coverage stays at that company. So you have to literally start fresh at the new company. And who knows, maybe they don't offer benefits that you may not be aware of. So
you probably forget about it anyways. I mean,
exactly.
Yeah.
Exactly.
Awesome. Okay. Well, thanks so much, Suleman. I really appreciate you being here. And this is great.
I can talk about insurance all day, so don't hesitate to reach out anytime.
Yeah, that's awesome. Yeah, we should do this again sometime. Maybe go next level or something like that. But for now, I'm just going to cover the basics right now. So
deal.
All right.
All right, buddy.
Okay. Have a great day, Suleman. Okay. Bye-bye. There you have it. So if you'd like to learn more about life insurance and disability insurance, you can reach out to me at my website at www.nathandemers.ca. I'm in no way an expert on this subject at all, but I can refer you to some local people in town here that are. That's all the time we have for today's show. Thanks for listening to the Sunshine Coast Real Estate Podcast.
This is an I Love Mortgage Brokering production.